The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
I'm here with Thomas Geerinck. Thomas, welcome. Thomas is ING's Groupwide Retail Chief Data Officer and locally in Belgium, still Head of Data and AI. And with him, we're going to talk about how he sees Agentic, how he's seen AI evolving over the years. And hopefully we get a little glimpse of how ING looks at AI and Agentic AI going forward. So again, welcome, Thomas.
It's a mouthful, right?
Yeah.
These two jobs. It's actually two jobs. One in Belgium and one in the
interesting.
group.
And I think a good mix as well for inspiration for local level and having that local head, which is probably a bit more technical than the group wide, to have some cross influence. ING, they're very active in the AI space for a few years now. For a few years, we are inviting guests from ING to talk about AI. First was Gen AI, now it's Agentic. How have you seen this evolve from your role?
Well, AI is nothing new for ING and also not in the banking industry. But if you think about our history, it goes back as far as 10 years ago, where we have seen the progression from advanced statistical modeling in the risk context towards the first machine learning techniques. And with the scale up of compute, those became more complex. And then, of course, it moved into machine learning, advanced analytics, the first AI, neural networks. You've seen that evolution up to a big moment. And that was mostly 2023, I guess, right? With the advent of Gen AI and the first
or a bit earlier even.
Real generative applications, indeed a bit earlier, but indeed from a banking context.
Yeah, that's correct. Yeah. First proof of concept in the
more
market.
or less.
Yeah.
And from that moment on, everything started to change. And we noticed and we realized AI brings scale. And in terms of deployment, the value is you build it, you deploy it to the maximum extent. In terms of ING norms, it means you build it centrally with a group of people that come from countries, that come from head office, it doesn't matter. But we try to replicate across all our markets and geographies, both in the retail space, in the wholesale space, in the business banking space, in the consumer space, to really try and leverage that scale. And that's really our strategy to date. In AI, in Gen AI, we're not in it for the marketing stories on 1,000 plus use cases, but actually our quote is 90% of the real initiatives that we strategically try make it to scale.
Yeah. With a very recent example, which was big news in Netherlands on the mortgages.
Yes, true. So in mortgages in NL, which is our home market, that is the biggest market for ING as a bank, we have now, as a first one, developed the full backend, if you will, so the non-customer facing part in an agentic way. So the entire processing of the application, the documents, the salary slips, the collateral, so the home documents, the processing thereof, the risk profiling, the assessment, the preparation of the origin of the mortgage files, except for the client contact, basically is fully done in an agentic way in the backend, and it serves basically as a service towards our brokering and towards our commercial channels facing the market.
Which I think incredibly interesting because most of the time with Agentic, we talk about efficiency, but this goes way further. What's different now versus the early Gen AI phase proof of concepts and internal assistance, according to you? Because I can imagine Gen AI, it was more about sharing the right prompts, etc., across the organization. Now with Agentic, we start with assistance. That's a completely different beast. More opportunities, but I can imagine also a lot more challenges in making sure that everyone stays aligned.
I wouldn't say these are different phases still. What we see now in this rapidly evolving spectrum, these are congruent phases or congruent streams. You still have the majority of people, let's face it, that need to boost their AI literacy.
Yeah.
And so for them, the first contacts with prompting, the first contacts with the Copilot, not even Copilot Studio or not even IT integrated, but simply trying to build a very simple agent, what they call it in Copilot, for instance, is the first step.
Yeah.
Really get your hands dirty, get AI literate, and really try to feel what does it mean to have some, typically very minor, productivity gains, time gains, effectivity gains, quality gains for yourself. That phase is still fully ongoing, and it starts with giving everyone a license, but that's the easy part.
Mhm.
And of course, we need to nurture that license. We need to see how to use it, how to give the proper tooling, the proper guidance, the proper training. So that full phase of AI literacy, citizen development, the way we call it, is in full swing still. We are, for instance, now having tens of thousands of licenses around ING. We have the full program AI for All launched, and we are tracking, and we're giving everyone the chance basically to jump on board. Hyper important for us. Let me start with that. It's the biggest challenge we see, our workforce, and really trying to give everyone the chance to be ready for the future that is coming. Next to that, and there I'm fully with you, we see the evolution from assistants, productivity assistants, which are then scaled within a smaller operational context within a team, now indeed to evolving to agentic simple workflows, agentic complex workflows, or even agentic workflows. And why do I make that distinction? It's the workflow concept of orchestration. In a simple workflow, it's simply a chain of events. And you could argue that the agentic mortgages case in NL has components of all three, right? So not everything is fully agentic. And fully agentic would mean you have an orchestrating agent that decides, based on all the inputs and the interaction with the outside world, what to do next. There are some predefined terms and some predefined paths and some predefined logics underneath, of course. And not everything is fully agentic.
Yeah, and that brings me to my next question, and fits nicely with the literacy part. What qualifies as agentic AI in banking? It's a question Andrew often starts with when we host dinners on AI, but we also see like the definition of agentic can sometimes be misleading. Very often is being abused as well. I see it a lot in the supply side of financial services. So what qualifies, according to you, as agentic AI in banking and, for example, in the mortgage process?
Yeah. So agentic in a general term means it's able to interact with the outside world, with the clients, with the events, with the bankers, with the employees, basically, but outside of the strict operational world of our bank. And that agentic part basically is about creating decisions and creating decisions based on the tools that the agent has to their disposal. If I take, for instance, a conversational banking context or a mortgage context, we foresee those agents with a number of skills and a number of tools and a number of call-outs to the systems that we have in the bank. So most of it is predetermined. In the mortgage context, it's about document processing and intelligent extraction, and then a couple of decision frameworks. And those are the skills underneath that are at the disposal of the agent, nothing else. There are many, many guardrails in place. In conversational banking, agentic is about, well, in the end, creating a better customer satisfaction, creating a better NPS, and it can go in two ways. Today, the chatbot gives you typically a pointer. If you want to know where your new card is, well, please check that link. Or if you want to change your PIN code, please go to this page in the app.
It's not taking any
It's
action.
not really,
it's guiding you.
It's guiding you. It's providing information, but it's not really fulfillment. So a first level of agentic would be to do it for you and provide you the information that gives you the full end-to-end experience, the full fulfillment of that request. Information or execution. And execution, please block my card. Please order me a new card. Please execute a wire transfer, and so forth. That's the execution part, basically, that we're. And I think that's the next phase that we're in, right? That agentic conversational component that really is client facing and that really fulfills an information request in full or an execution request in full.
And how often do you see the confusion between proper automation, which we've seen for many, many years, and genuine agents?
Yeah, we have a couple of nice pictures there internally, because the creed is indeed AI first as a mindset. And everything we try to do, we try to consider it, how can we optimize this with AI? The end result is not that we must use AI for everything. The end result is often, let's start with automation. Automation is basically scripting, smart scripting, a sequence of steps to follow.
Yeah, things under control.
In full control, fully traceable as well. And that is the border, that is the boundary and where we start from. that full automation. Of course, agentic is when we start generating with Gen AI, and that it becomes to a part predictive, right? And we should never forget about this. This is always predicting the next pixel or the next word, nothing else still. So that component is never forgotten, and that's why the element of control and the AI risk journey are very, very prominent in that space.
Let's dig a bit deeper in that decisioning process of where to move ahead with agentic and where to look for alternatives or even leave it as is for now. Which banking workflows are realistic candidates for agentic orchestration first, and which ones would you consider less attractive or look attractive on slides but are poor candidates in practice?
Well, we follow a bit the industry, right? So the most obvious candidates in terms of workflows is coding operations, and then you have the product operations and the service operations. And if we start with those three, coding, obviously the generation of code that is now proven in the industry, and not only banking, across industries. I've seen numbers passing by from 10% of gains to up to 70, and some claim more. We are not at that stage yet. Let that be clear. Still, banking has a large legacy. Typically, the larger banks, the global banks, have a large legacy of older systems, older technology frames as well. And that migration effort or continuous lifecycle management of your tech stack, well, these Gen AI frameworks and these agentic coding frameworks really mean an acceleration. And so I think we're just at the beginning of that to try and see that happen.
Say that's mainly generative AI, or is it also agentic, the coding part?
Well, both. So we started with generative AI as a coding assistant for all our engineers. Now we're making the step up. If you have an older legacy application which you want to bring into newer language frameworks, COBOL to Java, for example, we have now developed, as a first actually as well, an agentic coding framework to really more than half cut the development time from the one application to the new application. So in a traditional way, we had foreseen, and it's a real case, to develop a new application, a couple of thousands of lines of code into more modern screens, a new technology basically. We had foreseen 10 to 12 months. It is now done 4 to 5 months, including testing, end to end, real, including the screens, everything. And so that really means something.
Yeah.
That means basically that the revitalization or the rejuvenation of our tech stack, basically, which is continuously happening and costs a lot of money, basically can accelerate really. And so
it's quite
that
impressive.
also means something else. It also means something else, that new innovative features which require change work on our products, on our tech stack, also could be much faster delivered. So coding as a process is the first one. And then let me give you 2 more examples. On operations, we have product operations, like the treatment of a consumer loan. We have service operations like the KYC process. What we see there is actually a mix of Gen AI and classical machine learning models being put across the end-to-end journey. Previously, KYC was triggered by very in-depth customer data retrieval, so long lists of data points, and then a behavioral analysis, and then a due diligence, and then an alerting procedure. What we see now is that loop is becoming way, way faster, event-driven even, continuous, and triggered by all kinds of models. Data actualization with data retrieval, semi-Gen AI, behavioral modeling with classical machine learning, customer due diligence with machine learning with a risk assessment, plus a summarization. And so you see that full flow really connected end to end. Same applies in the product operations in consumer loans. You have the underwriting model, you have the origination package, you have the release of funds, you have the follow-up, you have the early warning signals, and so forth. And you see that end-to-end, basically, it becomes quite, I wouldn't say agentic yet, but infused with ML, machine learning, and Gen AI.
Yeah, organizational change, it doesn't pulse anymore, is it? And when I started at the bank, it went way too slow. We had like 2 releases a year, maybe 3. And like right off the release, it was calm. And then you need to speed up towards the big change. But these days, it's constantly changing and it seems to be going faster and faster and faster.
That's what we see.
What characteristics make a workflow agent friendly according to you? Is it stable rules, a strong audit trail, low discretion, bundled tool access, something else maybe?
But agent friendly means you need to be able to develop the agent. And of course, developing the agent is very easy to say. It's about setting the right guardrails, defining the right data model to be used by the agent, the right data, not too much, not too little, the quality of the data. This can be very parameterized from a database, but it's mostly also work instructions, process instructions, role descriptions, really the set of tasks that, or the set of mini decisions that an agent or a piece of code can make. And there is the majority of the work. Because typically we have multiple versions of such processes, work instructions existing on our SharePoints. These have been updated, obviously, but they are not necessarily agent friendly. They're not necessarily translated into skills
Yep.
or into tools or into roles. And so that translation effort to make it AI and agent ready, that for me is the big criterion of how far are we on these different processes. And we have many as a universal bank for each different journey, for each different product. A bundle of these products and a bundle of these process and work instructions exist. And there is the effort.
Let's dig a bit deeper into those guardrails, the limits that you set for an agent. Where do you place the hard boundaries for autonomy for a machine that is replacing work of a human? And what actions can AI take without human approval today, if any? Because of course we are in a very trusted environment, what banking is.
Exactly.
We need to be
about to
careful
say
there.
that.
Yeah.
Well, I was about to say that. So I would dare to say there are no agentic frameworks which operate without a human in the loop. And even broader, there are no AI models or machine learning models that operate without a human in the loop. And so in a fraud context, which is the primary context where AI was used in a banking context, well, every potential fraud case is picked up. And there the threshold basically of so-called false positives is very, very, very broad. We need to look into these because the chances that something might be wrong are really affecting our clients. And so that they're the potential risk for our clients and as a consequence, the potential value add of these triggers are huge. So there we need to be serious about it. Obviously, we need to, in a KYC context, we need to balance it out with what is the real risk of a client and the temporal effect and the change. And so there as well, you have these concepts of the triggering model and the judging model that tries to, as an intermediate, tries to judge what did we see, what can we learn from it as a bit of a contradicting analysis before it comes to the human, basically. So those patterns we also see. And then, of course, now that we move more into Gen AI and Agentic AI, the concept of Gen AI or LLM as a judge to really use as a filter or as a slowdown mechanism, as an explainability mechanism, that is really being explored. But as a consequence, we need to learn and we need to make sure that we can really explain this also to the regulator.
Mm-hmm.
We have now this evolution of these models. I can share with you, we have often visits from the regulator to go into deep debate around what does this mean? How do we treat this?
Yeah.
And how do we show that it works? So those guardrails basically are pretty crucial. And today, there is nothing that functions without a human in the loop.
Yeah. Well,
Not on the
guardrails are
commercial
probably
side,
also
not on the risk
audit
side.
trails to make sure that afterwards you can explain what happened.
That's one of the requirements, obviously, in the big decisions on a loan or on a client onboarding or a client offboarding. It needs to be explainable.
Yeah. Could you
And so we
already
try to handle
make
that.
a prediction on which decisions should remain permanently human? Maybe not because the model's weak, but because accountability should not be delegated? Or is that like a living process and we'll talk again in 5 years?
So, well, I don't have a glass ball, but and doing predictions in this field is very dangerous. But
Absolutely.
okay, there is another way of looking at it, and probably you're right. This view will evolve, but there's another way of looking at it, which might be a bit more stable, and that is in a human interaction, mentally, psychologically, there are simply a number of moments of truth that are super important when you get married, when you buy your first house, when you have a fundamental problem in terms of fraud and that affects you basically. And there are a couple of more. On those moments, it will always be valuable to talk to someone or to find the trust or to find a bit of context. And that's in the consumer space. Same applies in an entrepreneurial space. You've just founded your company. You've just succeeded the first takeover and those moments will continue to exist.
Mm.
And so in that moment of trying to create a delight or trying to ease the situation of the client with the right service, there we try to make the conscious choice of how to balance an AI interaction with a human interaction. And yeah, I think that view is what will prevail.
That was also one of the conclusions that we had at an Agentic AI dinner we hosted last week with mortgage as one of the examples. So yeah, it does make sense, and we'll see how it evolves going forward. ING has been one of Europe's most vocal banks on scaling AI beyond experimentation. Which AI deployments have generated the most tangible business value so far, and where has it been more challenging to demonstrate a clear return on investment?
That's a good question. But if you think about it, let me start with the no-brainer. In the fraud space, the value is not for us, but for our clients. Trying to capture money laundering, phishing attacks, and so forth. Really, that there is the value. Let that be clear. By the way, let's not dwell on the evolutions in the fraud regulation around phishing, because that's a whole other debate.
Yeah. We had a separate stage for that in the conference in Brussels.
Separate stage, but you may argue it opens the door for more phishing attempts. But okay, that's a separate debate. But then next to that, in terms of trying to measure the value, because I think this is the gist of the question, some of it is very straightforward. If you try to measure workload of people that are doing quite repetitive tasks, as there is in a KYC context, for instance, then translating that with a model into an impact on FTE doing the work, that's doable. And in that sense, the automation of a number of KYC processes has helped us to avoid jeopardizing even our license to operate, because indeed, as you know, every X amount of years, a full redo of the due diligence needs to happen.
Okay.
And that, of course, means a peak in workload. That is in non-machine learning context or non-AI context very difficult to absorb. You cannot simply upstaff 5,000 people for X amount of months and then let them go and then find another work or move them from work to work. So that provides different challenges. So in KYC, we can certainly say the machine learning models, the AI models, they have proven their value. I wouldn't say yet on aggressive reduction of the current workforce, but in keeping our license to operate basically and making sure that we cover all the due diligences and the transaction monitorings for all our clients. And that is a given.
Yeah.
Then where it's more difficult, let's be honest, everything we try to claim on commercial effort, making a banker more productive or more commercially effective, or making a campaign more attractive or commercially effective, and attribute that effect to the AI that is somewhere underneath, that could lead to analysis paralysis and very difficult debates. And so what we try to do there in ING is basically use our common sense and use our ambition setting. Okay, this is strategically the right thing to do. Moving to a conversational setting, moving into an AI suite to help our private bankers in an investment context. It is the right thing to do. And we think it will attribute to the growth. And we think it will attribute to the growth in terms of this number. What we don't try to do is do the reverse calculation and try to explain, because there, I think it's the wrong debate. And as a consequence, the commercial targets stay with the business. In ING, the analytics department, the data department is there as a partner in crime, basically, of these commercial departments, but not as a challenger to state you should cut costs by X, you should push sales by Y. That's not the dynamic we want.
Yeah.
That's an answer to your question.
Where have you seen the most challenging What has been the most challenging aspect to demonstrate a clear return on investment? These days, you often see that, especially in the programming, that too many tokens have been used, that suddenly AI becomes more expensive than the human, etc. I don't think that's happening at ING already, but
No, not
are there
yet.
some examples where it became much more challenging to find a business case?
We see that now in an enterprise grade and scaled context, right? We see that now coming with the more complex conversational use cases. So what is now the effective token usage? And it's on that trade-off that it's being played, right? In a coding context for an individual engineer, there indeed, I've seen also the articles where you say that the best paid engineer is the equivalent of in 2-3 times the token usage, and you only need a couple of them to operate a full factory. Basically, we're not there yet in our context, but for instance, in that complex code migration example that I gave earlier, the token consumption, if you do it in a smart way, that's not the hurdle.
Mhm.
The hurdle will be probably in bringing new innovations faster to the market and redoing and iterating for the sake of iterating. And there probably is a pitfall where indeed we will have to move to token quota per engineer and very strong FinOps, which we are setting up, by the way, as a priority now.
Okay.
FinOps in the sense of measuring and monitoring very closely what is our usage, how does this evolve, what does it mean on which type of models, because we have a whitelist deliberately of a limited set of models, but still the right ones, different in terms of size, in terms of providers, the right combination, if I may say, and yeah, that we will have to learn from.
Yeah. On a broader context, AI these days is very dominant US technology. We talk a lot in Europe about sovereignty. What have you learned about model choice and sovereignty in a European banking context when it comes to AI?
Well, we cannot deny it, right? We are quite independent. Everyone knows that of the US providers. Also, simply the infrastructure, not only the models, but you may argue is slowly changing or at least evolving in terms of a couple of initiatives, and we're closely monitoring that via our tech department in close context with the likes of Sense and some others, trying to bring that sovereignty to Europe in terms of infrastructure.
Mhm.
In terms of models, the offering is a bit thin spread, right, in the non-US spectrum. And of course, I'm excluding China for the sake of simplicity here. But so we are, for the moment, using US models. We are also looking, obviously, in the available European models. But you see that it's difficult to keep up. The speed of innovation in this spectrum is extreme, and so we are bound to these evolution following the European, following the American, the US providers. So
Yeah.
we are on that path.
Over the next 24 months, what do you think will separate the banks that genuinely operationalize agentic AI from those that remain stuck in the demo mode?
We think it's all about scale at a global level, so multi-geography.
Okay.
If you think about the successful players in the financial services, and some of them more incumbent banks, some of them highly aggressive fintechs or neobanks, if you will, not always having the full offering, but still very aggressive, very right positioning. If you
See what you're
think about
referring to.
exactly, well, they have scale
Hmm.
by design.
Yeah.
Single platform, single development, single product offering, single way of approaching a client, single type of journey, single type of interaction. And so that speed of then putting AI against it or agentic AI against it, client facing and internally, that's really and that's really where the difference will be made, I think. And then it comes down to the right resources, and the right resources in terms of the AI engineers, the AI ops, the biz dev ops people, as you the super analysts basically that can work with agentic AI, the super engineers that can work with agentic AI. And let's be honest, that is a constraint.
Yeah.
Not only in ING, I think it's in all industries and in all types of companies. I would argue even also in the neobanks as it's new.
Mhm.
So combining that, the constraint on the right resources, the right workforce that knows how to operate this and build this, with a global deployment model, multi-geography from the start, I think that will set apart the ones that will make it versus the ones that will probably need a bit more time or lose out.
Maybe a final question, and you hinted to that already a few times, but which role in the bank will change most according to you or according to ING because of agentic systems? Are you rather looking at operations managers, product owners, risk teams, architects, frontline staff, or according to some of the news at middle management?
Yeah, that's a bit of a difficult question in the sense. Let me try to elaborate what I mean, and it's linked to my previous answer as well. Because if you think about it, there will be these global scalable AI platforms. Let me summarize it like that, which are then operated by the core teams and an operational component that sits next to it. And if you think that through, boundaries between countries or boundaries between different lending products or boundaries between client segments, I think they will not evaporate, but at least become way more blurry.
Okay.
And that has as effect that in operations, for instance, now we're trying to organize nicely for mortgages within a market X and mortgages within a market Y and mortgages within a market Z and so forth, or business lending within different markets in an operations context. That will probably sit closer together if you bring it in terms of agentic capability into a lending factory.
Okay.
A lending factory with AI platforms and AI savvy people that are operating the human component next to that.
It's
And
as
so,
if I've heard that story before 10, 15 years ago with the rise of mobile, that
yeah,
everything would become more blurry and that we all start using the same approach, etc. But yet you still live in a certain context with very specific national laws, local culture, habits, etc.
yeah.
Yeah, we'll see what agentic can do about that, of course.
But so what I was trying to say is in the operations world, so the COO world, it is very clear this will have a massive impact.
Okay.
The way we are organized and the way we deal with technology today and the way we deal with our clients and interact. Also in CTO, the technology world, the engineering world, but still you may argue that it will accelerate the skill level of the engineers and basically we might need more of them to keep up with the pace and the management and the maintenance of these agentic factories then, if we make it. And then a third component is the product. Because what does it mean then to own a product? It means you're in charge of and the value proposition and the way we deploy it or build it, the agentic way this time, and the way we operate it towards our clients, the agentic way this time. And so that product thinking or product ownership end to end, that becomes a totally different beast.
Mm-hmm. Yeah.
And way more difficult to segregate. But it's a bit of philosophy, I believe.
Yeah.
And a bit vague, but okay.
But
That's
great
where
way
my
to
thinking
end this
stretches
interview.
for the moment.
Great way to end this interview. Thomas, these have been 37 minutes of extremely valuable information about how you look at AI today. And I can't thank you enough for that. And I bet that the audience will agree with me that this has been a very, very good interview. And I look forward to see how that evolves going forward.
My pleasure. And I hope you are right. Let's see. Thank you, Rick.
Thank you. Bye.
Bye.